All right, hello, welcome to another episode of Freewheeling Fridays. I have with me my partners Bhargavi and Vinod as well. Hello. We can hear you, Bhargavi, but very feeble. Your
Hello,
voice
hello.
is a little
My
feeble, and there's
testing.
a little bit of echo. We can hear you, Vinod, loud and clear.
We
What's happening
already
now?
live.
We are, yes. We are
Oh,
bang
okay.
on live, 6 p.m. on
Okay.
the dot.
Awesome.
All
Good
right.
evening.
So we have our surprise guest also with us. So, but before we make the introduction, right, I think I just wanted to toss it over to Bhargavi to make a good job at it.
Sure, thank you. I'm going to ask our surprise guest to give his history and all that. But I'll tell you, he and I, we have a common shared passion towards D2C space. We both love what's happening in the space. We are always eager to look for new companies, new brands, and other ecosystem players. So our okay, you can't hear me.
All right. So let me just take it over from there because I think your audio is horrendous. I think what Bhargavi is trying to say is there is a common denominator between our guest today and Bhargavi in terms of the D2C, direct to consumer brands. And rightly so. Let's just see, Bhargavi, your audio, is it fixed now?
Is it
Can we
better
try
now?
again?
Is it better?
I think it's slightly better.
Okay. Yeah, so you're right. That's what I was saying. That's the common denominator, and that's how we got acquainted well. So now, without any further wait, so we have Saptarishi from Wipro Ventures who accepted to join us. Like, what are you going to ask me? I said it's the simple feeling. So it's feeling in its truest sense. So yeah, I tried to put him on.
All right. I think I'm just going to repeat what you just said. So our guest today is Saptarishi from Wipro Consumer. I'm going to put him right on right now.
Yeah. Hey, hi guys. I hope I am audible.
You
Yeah.
are definitely audible, Saptarishi. How are you?
Perfect,
Welcome to
perfect, perfect. Yeah,
Freewheeling.
yeah, yeah. Great to see you, Vinod. I hope you are fully fit and back now.
Yeah, absolutely. Thanks, Sapta. Thanks for that.
Yeah,
I'm
yeah,
good.
yeah.
Looking good. Yeah, all well.
So,
Welcome.
Bhargavi, for some reason you are like extreme. It's like the voice is extremely harsh.
Yeah, yeah.
So yeah,
I
Bhargavi.
think you should switch back to your mobile,
Yeah, Bhargavi.
Bhargavi.
Just sit back to your mobile and look forward to you to joining again. So
yeah.
great, great, Sapta. Thanks for joining. I think
Yeah. Thanks a lot, guys, for giving this opportunity to speak and speak on the on your platform. So I think to get started, I think I'll take a minute to explain like what we generally do at Wipro Ventures. So yeah, like we are like one of the very few CVCs in India currently. Like there aren't many. So the way we like to describe ourselves is VC plus. So along with so we are like two people who are trying our hands at VC investing, and along with that, given the fact that we have a long consumer history of Wipro consumers, so banking on that, we are trying to build build D2C brands leveraging the Wipro consumers infrastructure. That's about us. And I like as Bhargavi mentioned, we keep on discussing ideas, we keep on interacting ideas. I think while I got introduced to Vinod initially in Java, but I think post Vinod introduced me with Bhargavi, like we keep on having very frequent interactions. That's about it. So before Wipro, I was working for I was not in the VC space. I was working for a similarly allied industry, which was at in a private equity firm called Techno Capital. So over there, we have dwelled our hands on consumers' names. So MyGlam was sort of our baby, where we invested when it on the seed stage, and from there we had managed to build it at a very larger scale, and post which, of course, after scaling, we have invested over here again from Wipro Consumers. And along with that, there is a travel bag company called Safari Industries, which is like a listed space in India. But like in Tano, we also invested in that space, in that company, and helped it grow. So that's about it. Means like along with that, we had dwelled on few other consumers' names in. I had dwelled on few other names in my private equity stint, and currently post this COVID led era, I think once this D2C boom has started, so we are seeing a lot of new brands coming up. So that's what about us, and that's what the play is, to leverage the internet ecosystem on and help D2C brands scale up further.
Great.
All right.
Yeah, Bhargavi, this is
Yeah,
far
we all
better.
want to talk to you at the same time. Yeah, Bhargavi, we can hear you. Go ahead.
Great. Thanks, Sapta. So now I think you already got for MyGlam. I think that's the biggest story of late.
Yeah.
So I wanted to understand more about what was the thesis behind MyGlam, and what was the thought process that went behind it.
Okay.
And while you answer it, we know MyGlam was a very large round, so it will also be good to know where does Wipro Ventures stand in terms of stage of investment.
So so again, like MyGlam, when we invested in MyGlam in Tano, at that point of time, we wanted to do so at that point of time, our investment thesis completely pivoted. At that point of time, we invested in MyGlam, thinking it as some sort of an urban company for spa, for providing home care spa services. So I know it's kind of shocking, but that's what our investment thesis was. And then we saw that upcoming brands like Sugar and all coming up. So I'm talking about the era is 2017 and onwards. That's where like people are, it's like there we keep on hearing that new companies are coming up, and that's when the founder over there thought that we should invest in we should think of pivoting to a D2C brand, because at that point of time pivoting to something like an home care spa services was not we saw there was substantial burn, and post which luckily at that point of time we managed to like MyGlam managed to onboard a strategic investor in the form of L'Occitane. So that really helped the company grow but then the point was it really wanted the focus was it really wanted to be a D2C play. So when I want to say a D2C play was I mean to say that minimum presence in the third party platform. So like till date also, like majority of its online sales, I mean 90% of its online sales happen in via its own website, so which is like among the very few D2C brands in India. So that's what the plan that's how MyGlam started. But I'm talking about 2017 2018. At that point of time, the CAC was really high for acquisitions, because only there was Amazon, because at that point of time there was mostly Facebook through which people used to acquire customers. So while the company grew substantially, but there was but at the same time, like it had to shell, given the fact that it had to acquire majority of its customers through the online channels. But then the pivot came, I believe, last year. Of course, before that, the company has scaled up significantly. Then COVID hit us. COVID hit the company, and then they decided to acquire PopXo, which like everybody thought like what are they trying to do? But then the founder was quite clear, and he really understood like what his strategy of acquiring PopXo was. Basically he gained an entry to a very to a set of customers who were very who actually were very fashion conscious, who really understood MyGlam, who really who could really interact with the company. So the whole community building that we are seeing across D2C brands, that was something. He got some sort of a promotion in that, like once he acquired PopX, so like he directly got a fully established community, and through which the company started growing up, and now the CAC is relatively has significantly fallen, but at the same time the growth has come back, and it's like it's far and it's growing at a significantly higher rate than what it was during pre-COVID or from its pre-COVID levels. And at the same time, like before like the second wave hit us, we had the offline channel also started expanding. So that's what the thesis over MyGlam was. Broadly, it was like pivoting to a lower CAC play, and along with banking on the whole e-commerce D2C BPC space. That's what the story over there was. In terms of our shareholders, of course, like given the fact that already MyGlam has had raised significant amount, decent amount of capital before us. So like we are like we of course we do not we hold a relatively minority stake, given the fact that our like we are currently a 200 crore fund only, and our ticket size is relatively lower compared to the whole fund at where the whole fund size was.
Gotcha. So,
So what is the
Sapta, I have.
Yeah.
Sorry, Bhargavi, you want to say something?
No, you go on. I work with Wipro Ventures typically comment, but
All right. Somebody has to really turn off their notifications on WhatsApp. It's been nonstop. Sapta, and what I was trying to ask you was, you invested in companies like One Life,
Yeah.
and then you have Let's Shave, another portfolio company. So these are fairly early stage investments, right? So are they all going to be somewhere in the Series A stage?
So yeah.
Any thoughts on that?
Yeah, so we are like so our fund means like our ticket size is generally 15 to 20 crores. Happy to come in early in case if there is a scope for follow on. So so in case of Let's Shave had scaled up significantly, and currently you can say that it's a Series A investment for Let's Shave. But again, like there is like currently the company is scaling up quite well, and it really doesn't require much capital to grow, and that's what over there. But you can say that from Series A to Series B, probably that's where our sweet spot lies. Cutting a check size of between 2 to 4 million is what we are more comfortable at.
Got it.
One Life is a slightly earlier entry compared to these companies, given the fact that we feel that the industry is still nascent, and there is still enough opportunity for a lot of players to grow in case if they position themselves correctly.
Gotcha. And Sapta, the other question that I have in my mind, right? The way that you guys are different, like you said earlier, right? You're a corporate VC. One of the very few corporate VCs we have in this country, right?
Yeah.
So what are some of the things that will take into consideration before you make an investment into the company? One.
Yeah.
And two, the second part of my question, how do you see the signaling, right? Do people see you as a strategic investor in those companies, and how does that look for you?
So the moment we introduce ourselves, we try to clarify ourselves that we are not coming from a strategic angle. So the moment we are speaking to a new founder, our first line is that we are not strategic investors. We are over there more based on return focused investment. That's how we like to introduce ourselves. But of course, like before speaking, founders have their eyebrows raised. That's like given the fact that as we grow and as the fund matures, I think more less and less people will be having that question. But yeah, it's still early days for us, and it's better to clarify before speaking with the founders. So that's how we do. So yeah, in terms of thought process, so one thing that we really focus on is, given the fact that so our IC comprises of all people, most of the people who are coming, who are general business people. So our CEO, the India head as well as the Southeast Asia head, all of them are sitting in the ICs, and they have like decades of experience in the consumer industry. So in terms of differentiation, what we like to do is probably we have our own R&D setup. So I'm talking about like a pre-DD stage, like how we look at companies is basically we take the samples of their products. So I think along with the founders, I think probably it is coming from a CVC angle. We do like to place a very strong commitment on the product, on the quality front. So we have our own R&D lab. We do certain R&D checks of the companies, at least in terms of claims what they are saying. So suppose like if we are talking about a personal care brand, it's like given the fact that many of the D2C players, early stage D2C players, manufacture it at third party factories. So what kind of quality checks there are there? And in personal care, so something like are there any heavy metals present or not? So those are the general quality checks, which probably, so we are so when we are investing at that point of time, we see that indirectly the brand is, a Wipro brand is also being associated with that. So that way we are very conscious. So that is first thing that we like to check. Second thing is, of course, we have our own marketing and the sales, the marketing team. So we generally like to discuss with them how the kind of positioning strategy the company is trying to place itself, what kind of differentiation are they doing. So of course it's like having more hands to help us in helping in the thought process, but at the same time I say that given the fact that there are we come from a consumer space. So of course there is what you can say is we are leveraging more of the operational efficiencies that currently exist in our in Wipro consumers.
Great. So one larger question, right? Like looking at today's environment, right? On how D2C also has become like literally a hot space, right? You know this. You know,
Yeah.
we've seen such deals, you know, from our end also. You know, it's happening. One is, you know, what's happening in the first place, and how does, you know, Wipro's view look? You know, how do you look at the future? You know, little gazing. You know, what might happen in the future in the consumer space. Yeah.
So the way we are looking at is probably, so again this is probably the way we are thinking. It might not be the way things might be heading up. So it's a way that we currently believe, and it might not the playbook might not play as per what we are seeing. So first is that currently if I'm talking about only FMCG allied sectors, their share in the overall I'm talking about the online space. The online space only captures close to 10% of the share, and I'm talking about this includes even the bigger brands. So one thing that we will see going ahead more and more is that the bigger players also trying to position themselves in term similar to how a D2C player is trying to position itself. So ITC, I don't know whether you guys know, ITC had launched its own D2C like website where you can place your orders. Similarly, like Lakme has also done that. So of course, like it's like generally we see that the smaller players copying it from the bigger players, but this is a trend that we are seeing, that the smaller players like bigger players are actually looking down at smaller players and taking the best of the world, I believe. And going ahead, so currently there are two things. So first is if everybody is trying to look at post-COVID, the kind of D2C growth we are having, it's sort of like it's an exponential growth. But I think going ahead, of course, after second wave, I think the growth would be much secular, where the growth means like the growth. So currently, what has happened is, be it any of the D2C brands, they have grown irrespective of their brand positioning or irrespective of their product offerings. But going ahead, I believe that the growth would be much secular compared to what it has been now. And while the opportunity space is huge, and there is like and it will keep on growing, but at the same time, until or unless a brand has a very clear positioning strategy, a brand tries to differentiate itself, and until or unless it does have a very mature, until or unless it tries to develop a community. It's very difficult for a brand to grow ahead. So when I say to grow ahead, I mean to say like from let's say up to an growing above an MRR of basically growing over an ARR of 100 crores is what I'm talking about for D2C players.
Got it, Satta. Yeah.
That's it.
Bhargavi, you have a question, so I put the spotlight on you.
So what are your thoughts on, let's say, ecosystem players, right? So because we have been talking about brands and larger companies coming in. So would you guys look at investing in somebody enabling the e-commerce ecosystem, or general thoughts?
Honestly, we have looked at those players, but I don't know. Probably it's we are currently, given the fact that we are more FMCG allied, and we are like while we might understand those businesses we might understand those businesses, but still, I think that given the fact that we remain an FMCG allied brand, so till now, we haven't been very keen on investing in those setups. But those are we know that we know for sure that next 5 years those are the pivot points which is going to scale any of the existing businesses. We had looked into a few of the names, but somehow till now we haven't cut any checks over there.
Got it.
So, Saptarshi, before we wrap up, just one last question I had was earlier on, we were seeing brands taking 5 years or more, for them to get to that 100 crore magic mark, right?
Yeah.
Are we really seeing, this contracting now, and is this something that is going to stay, in the post-COVID world?
See, I think one thing is for sure that, of course, it's like if you have a very strong positioning, and if you have a very niche product offering, so achieving 100 ARR is something which has become which is now easier in 1 year. But there are two things. First of all, like how can you sustain that? So if you are growing from 0 to 1 within 1 year, at that point of time, your bottom line will not be looking really pretty. So to sustain that kind of growth, you have to think that while there can be multiple players who might emerge, but only the ones who have a who managed to crack the unit economics, who managed to crack the unit economics clearly, they only will manage to take the game ahead. So it's like, while of course 100 crore is not a joke, but going ahead, how does a player sustain, even not growing, but even to sustain that, you need to have a very strong strong unit economics in place to sustain that amount of growth. So that's something which I think which all the players who are even existing in the current scenario need to look over there. Because see, the point is, with only e-com play, you can scale to 100 crore ARR. That's fine. But the moment you move to an offline you move to an omni-channel strategy, at that point of time, your working capital burn and those kind of things really starts hitting the cash flows. And while you might be a bit positive, but overall, given the fact that it would be draining your cash flows, that is something which the brands need to take care of. That's what I think.
Great. I think it was great, Saptarshi. I told you 15-20 minutes chat. Thanks a lot for joining us in short notice. It was really great chatting up. Hope to have you again soon.
Sure. Would love to interact further. Thanks, Vinod. Thanks.
Thanks, Satta. Thanks.
Bye.
Take care.
Bye.
Bye-bye. Okay. So that was like a fast-paced interaction on how D2C brands work. I think maybe we should do a lot more investors also going ahead. and obviously
I
started.
think the interesting takeaway for me, from that conversation, right, is within a year, you can actually build a brand that can be 100 crore plus ARR brand. I think hands down, that's if there is one takeaway from that conversation, that was that.
Yeah, I
Yeah.
think the games have changed, Karthik. Right? Today it's kind of possible, right? Like we also saw one tech company, going from zero to $150 million valuation last week in less than 7-8 months, literally
Months.
months. And the tiger is prowling, as I keep saying. So
Tiger and
that's
her cubs.
Tiger and the Cubs are prowling. That's one, and I think there's even more something more exciting, at Java Capital's front, right? Maybe time for us to pull that up. Yeah,
Yes, we
yeah,
have a couple of exciting things to announce. Which one do you mean? Wow, this is a new problem that we have.
yeah, yeah.
Ta-da!
Yeah. Okay.
So
Let's
yeah,
start with this one.
after a break, we are back with a new improved version of Angel Investor course. We can't wait now to start this batch, and yeah, we are back with full energy now.
Yeah, yeah, and we
Yeah, so
had
this is
a
going to be better. This is going to be badder, and this is going to be very exciting. Again, 8 modules. We have ramped up use cases, and sorry, case studies, and interesting new data to add. So we are opening up batch 7, which will start from June 11th. It will go on for 4 weekends, and those are 8 modules, 75 minutes each, with the last module where we'll have a very prolific angel investor or a syndicate lead or a fund manager to join us and talk to all of our participants from the course. So if you're evaluating putting money in startups and wondering where to start, this is the place where you should be starting, right? We have actually, I think we've priced the course quite um, at a very affordable price. If you also join or register in the next 1 week, reach out to us, and then we'll probably able to do something more on the pricing. We'll give you a surprise discount or something. You can always reach us on hello@javacapital.co, and the link is right here. It's https://bit.ly/java JAVAANGEL angel. Without any further ado, please do sign up. And there are some interesting statistics also, right? We wanted to put up. So let me also pull that up. While I do that, take it away. Why should people join this course?
Oh, people should join this course, because they want to learn about something new and exciting, right? And when we started this last year, right, there was nothing like this, right? Today, some of the international VCs that we look up to, right, they also started something similar, slightly different in a way, right? But it's pretty much the same. You teach people, how to become an angel investor and how do you, balance risk and reward. That's what we've been doing, right? At a very fraction of the cost. The US course, for example, I just throw that number out, right? It's priced at like literally 2.5 lakhs. And our course, right, last year was priced at 10,000 rupees. And this year it's priced at 15,000 rupees, right? Like, that's like absolutely affordable, to anybody who just wants to learn, not necessarily even, wanting to invest. It's like quite open to, students, who really want to know about it, or, entrepreneurs also want to understand the other side of the story. And of course, angel investors, like Sham, who attended our first batch and who's here. And he's saying, is there a booster dose for people who already attended? Yeah, we're going to do it's called Corona Angels, Sham. We're going to launch it shortly.
No, Vinod. Sham, you're always welcome to join, and I think now you should probably come for our guest session, right?
Yeah,
Because I think
correct.
you are qualified enough to come and attend our guest session and share your angel investing experience.
No, no, absolutely. I think we should bring Sham in one of the guest lectures along with the maybe this year this upcoming batch. We should bring people who prolifically invested with us or in general, right? So Sham would definitely qualify for more than prolific investor. Yeah, Sham, you should join us as a guest angel. At the end of this course. I'll keep you posted. Yeah, that's like great. Good to have you. Yeah.
All right, so here is the statistic that I wanted to talk a little bit about. We just talked about Sham, who has invested with us, but he's not alone. There are 25 new angels who invested, new angels, who have invested in our deals, right? And also, obviously, deals from other people as well. After they took part in our angel course, we did 6 batches so far. I think the participants were like 105. And then we've also done a very special abridged version of the course exclusively for women, and where how many, Bhargavi, we've converted like close to 3 women from that, right, into angel investors, which is quite good, and we're very excited about that. Overall, we've added 25 new angel investors. So these guys have been investing with us, and also other deals as well. So guys, if like Vinod said, you don't have to really invest right off the bat, but I think this will definitely help you understand the basics of startup investments. How do you assess companies in technology, and what are the terms that you should really care about? How do you build a portfolio? What should be your exit strategy, and so on and so forth, right? So we will introduce a whole lot of concepts that you should really prioritize when you start investing, and methodically look at this asset class and invest into these companies. So as always, if you have any questions, you can always reach out to us on hello@javacapital.co. Do go to the link. It's up there on your screen right now. Check it out, and reach out to us. If you're ready to enroll, go ahead and click the button to register, and we will see you on June 11th.
Awesome. That's great.
I think it's June 12th, Saturday.
Did I mess up that? Okay, I messed up the date. It's June 12th. It's right there on the screen.
It's right.
Yeah,
June
yeah,
12th. Yeah. Even I am excited, right? It's been quite some time, since we kind of took teaching someone. So let's see, how that goes this time around. Yeah. So what's the other big announcement, Karthik? I mean, I actually, this also, it is like quite exciting, for what has happened. And I'm going to send you a link, that you should put up, Karthik.
You should totally do the honors on the next announcement, Vinod, but I'll just give it a little bit of prelude, right? It's sort of like build it up. Like in South Indian movies, how the hero gets elevated in the first 15 minutes, right? It's kind of like that. So this company, Vinod, has been following up for quite some time, and has tried his level best to get it funded in his previous firm, while he was working at his previous firm. But in a true case of perseverance, right? He never said no, and finally he made it happen at Java Capital, and at this also at the stage that we invested in is also very interesting, right? So kudos for making that happen, Vinod, and you can take it away from here.
Awesome. I think all of us truly, dream of investing in rocket ships, right? And here is actually an investment in a rocket ship company, which actually makes a rocket ship. And this is Agnikul, I think, like Karthik said, right, the story for Agnikul goes so much longer, right? I had seen them earlier, in the seed round. I'd seen them at like a pre-series A kind of a round. and then eventually to set up Java Capital and then invest now, right? Seems like persistence and a lot of validation on the conviction on the company, right? It's not usually our sweet spot to invest in a company which is valued at like or around which is at $11 million. That's not our sweet spot, looking at most of our investments. So this is an extreme outlier because we believe that the opportunity for this company exists even from here to go ahead and do a $500 million company or $1 billion company from here. We see that, and that's one of the reasons we said even at this stage, right, it makes sense to invest in this company. And I think I should thank both the founders Srinath and Moin. We will try to bring them onto one of the freewheeling shows in the future. But I think I should kind of appreciate them, given they did not have accommodated us in some sense, right? That's what I would say, right? Given the size of our firm and the leverage that we have, but grateful to both of them, and it's a privilege to be part of a company like that. So that's a shout out to first Srinath and Moin, and secondly I think also to some of our VC friends. Who kind of been a real part of this, which is Vishesh and Arjun of Speciali. Again, they invested in this company and they've been great friends. Again, right? They just said we would love to have you guys again, and that partnership is continuing. And we look forward to doing a lot more with all VC firms. And this has been one of our strongest relationships so far. Shout out to those guys. Kudos to them. For the character that the founders have shown and also the investors shown, because we've seen in the recent past, Karthik, I think all of us know, not all founders, not all investors show depth of character when it is a hard time, right? And I think in this transaction we've seen that founders have stood by what it meant, and in a way, and including investors. So I think this is great to have and see success of such companies. Yeah, absolutely, thrilled. Yeah, you should pull up. Karthik, yeah. Awesome. Yeah, so the rocket ships, we are on the rocket ship, yeah, finally. It's almost been literally 5 + 2, 3 month journey for us to be on this board, yeah.
Yeah, for sure, right? And I think, look, while we were discussing the background to this deal, right, I think some of the things that we should probably mention is why we invested in this company and still continue to believe in this company, right? I think one thing that you touched upon is obviously the founders, the clarity of thought, and the grit, right, and the perseverance of the founders, because it's not been a very it's not a bed of roses, right? Even they really have to navigate some tough times in the last few years. Now in hindsight there are a lot of believers, right? But in the beginning, it was very tough to believe that a company of this sophistication and in technology could come from the Indian startup space, right? So that was one of the very strong points that we have taken into consideration, right? As much as we love the idea and everything, I think we have huge respect for the founders for their journey that they have taken over the past few years.
Absolutely, yeah. Okay.
All right, so those are the two announcements that we wanted to make. Are we ready to say goodbye? Do we have anything else to add?
Yeah, if there's anything that caught your eye or anything else, we can, another 6-7 minutes more, I feel. I think it's been a busy week.
I don't think we should spoil this effect of Angel Course announcement. We should let people go and register for it in this 5-6 minutes.
Yeah.
Look, again.
Shyam, if you're there, please leave some good comment here live for us to project on the Angel Course.
There's one on, interestingly on LinkedIn where Narendra's commented, Karthik, you should try and go to my post. You'll see 2 of our angels having commented on that. That's like also interesting.
I am going there right now.
And Shyam is anyway, I've used Shyam's previous tweet in my Twitter thread, and also Narendra's tweet, right? They've been like great supporters of the course itself. Yeah, I think
Yeah,
look,
I will.
lot of people may run the
Thank
course,
you.
guys, and I want to shout out and tell Karthik. A lot of people may run a course, uh, but I think we are practicing and we are also at the same time preaching what we practice. So
Yeah,
that,
for
that that
sure.
thing, that makes a big difference. We are not doing this from a very textbookish approach. We are literally doing this every day, and that passion you would see in the course that whenever we teach, and this is really live learning. We are learning, we are teaching at the same time, and that brings in a huge change in how this is taught. And this is not about just gyan. We kind of make it very very practical, so that you can go back, start immediately, looking at how to invest. Uh, uh, that's what we try and do, and we have fairly decent amount of traction so far. We expect to reach these numbers next year, and our target is to get to over 1,000 investors over a period of time. And also, in between, we should run another women-only cohort, right? Like we did it in March, where we had 30 plus investors. So we probably will do that also. And
Yeah,
another
and a shout out from Sham. I just put it up on the screen. Strongly recommended to everyone. Thank you so much, Sham.
Thank you so much, Sham.
yeah, that's cool. Yeah.
Okay, we wanted to show something else as well. I'm trying to pull this up. Okay. All right. Can you say it?
Okay, I
You
can't
can-
see it big, so it's
Yeah.
No,
You can see it. I think.
You
I
should,
think it
that
was
because
Narendra.
LinkedIn, yeah, you should zoom out,
Narendra.
zoom in, whatever. LinkedIn is giving you so much more ad space. Yeah, no, but basically, that's. I would just read out. Vinay is saying, greatly benefited from this course. I would recommend it to my peers. And Narendra is saying, can't believe it's already 1 year, and glad we made some good investments together. Shout outs to both of them. Thanks to them, and they are all investors. Literally, the part of the investors list. Yeah. Yeah, please don't get ideas and don't chase them. Others, yes.
Yeah, and Sham is saying it's a very practical course with good dose of theory.
Yeah. Awesome, guys. Then that's a wrap, Karthik. Thanks, Sham. Thanks for joining us. Good
That's
to
it,
hear.
guys. Thank you so much for joining us. Be safe.
Yeah.
Double mask up. Try to get vaccinated as much as possible if you can get hold of the slots. I know I've been trying, and Bhargavi has been trying forever now. Hopefully, we'll get vaccinated
Karthik is
soon.
waiting. Karthik is waiting for the American vaccines for all your.
I am not. What are you talking? No, don't even put it out there.
no distraction. Okay, just focus this week.
Okay. Thanks, guys. Thank you all. See you on
All
next
right,
Friday.
thanks for
Bye. See
joining
you
us,
next
guys.
week.
Bye-bye.
Stay safe. Stay indoors. Bye.
Bye bye.
Take care now. We'll see you next week.